All right, episode number 45 of The Compound and Friends. You guys who have been listening know that we have lined up a series of extremely intelligent guests ever since we started last June. Today, we're very fortunate. We have one of my favorite people covering the market, one of my favorite journalists. Will you call yourself a reporter or a journalist?
Reporter.
But you're both, though, right?
Yeah, I'm probably less of a reporter now.
So when you're a journalist, you turn the hat backwards, like
That's right,
Stallone
that's
in,
right.
In Over the Top. All right. Matthew Phillips, ladies and gentlemen, welcome to the show. So happy to have you.
Happy to be here. Happy to be
You
here.
excited about this one? Are you excited as I am?
Very.
Very excited. All right, we wrote this whole bio for you. Can I read it?
Sure.
Okay. If any of this is untrue, Duncan put it in here. Matt Phillips reported for the Albany Business Review
where
and
it
the
all
Bakersfield
started.
Californian from 2002 to 2005. All right, that's pretty much it. Is there
That's
more?
right. That's
Okay.
there's a few things.
Matt was a Wall Street Journal reporter. That's how I met you. From 2005 to 2012, a pretty exciting time to be at the Journal.
Yeah.
You covered some shit.
yeah.
Okay.
It all went to hell.
It really did. And then you were at Courts covering finance and markets, editor-in-chief for Vice Money from 16 to 18, markets reporter for the New York Times from 18 to 22, not 18 years old, from 2018 to 2022. And now you are the markets correspondent for Axios, and you co-write the Axios Markets newsletter. Over 650,000 people get that newsletter, myself included. I read it every morning. I never miss it. You guys
Awesome,
do an
man.
amazing job with it.
Thank you.
All right, let's start with this. What the is Axios? You guys came out of nowhere, and
Yeah.
you're like half of my reading material now.
Yeah, no,
What
it's
exactly
awesome.
is this about?
It's built on sort of this mantra. There's like, you know, when you go to start at a new place and you're just like, they've got their own language, they've got their own,
Yeah,
they've got their own.
axiomatic. Is that where it comes from, or axiom?
They've got it's smart brevity is the thing. This infuses everything. And at first, when you show up someplace, you're just kind of like, yeah, that's what they say. But it's really like everything about the place is like, is it smart? Is it fast? Are you wasting people's time?
Okay, I love that.
Yeah, and I love it too because you know you don't have to do all the stuff that you have to do at like a traditional media place where it's like, can't we find a
Yeah,
person who's
fact checking. Forget
Yeah,
about
right.
all that. Who has time for that?
No, I love the facts. It's just like all the kind of like nonsense that you dress up around the story.
Kevin Smith from Oregon, who just sold his 401k. These
right,
random people.
right.
Oregon,
What did I say?
Oregon.
I'm a Gon guy. I say
I'm
Oregon.
I'm sorry. I promised myself I wouldn't do that. Hold on. So actually, just as I was asking you that question, it occurs to me, I asked Sam Rowe that exact same question on this show. And he actually said smart brevity. All right. So you guys really like eat, sleep, and breathe the thing.
Yeah. It's just don't waste my time. Don't waste the reader's
What's your
time.
typical article length?
It's never more than 600 words, and it's almost always between like 300 and 400.
You respect your audience.
Respect the audience, man. Yeah, definitely.
Well, that's a very au courant concept, though, because nobody's going to read.
Dude, nobody knows what you're
1,500
talking about.
words.
Au courant?
Yeah, I didn't know we were going to speak the language of international diplomacy.
Okay,
here.
I apologize. All right, wait a minute. So you are covering markets. This is something that you have done at the highest levels. You've done this at the Journal, New York Times.
Yeah.
So you've got that ability to understand everything, but now you have to make it short and sweet.
Yeah.
And impactful. Is that a
I would say I get to make it short and sweet.
Okay.
You know what I mean? So much about, you know, working in newspapers, all those places are amazing. I mean, they're just like amazing. They still do amazing work. But so much of what you write is dictated by the format. You know what I mean? It's dictated by the paper.
Bloomberg's got like a 16-paragraph format, and you kind of have like by paragraph 3, they're rehashing old articles.
Right. It's like, why?
The Journal makes you find the dumbest person and quote them. Right.
From Oregon.
From Oregon.
Most of their sources are from Oregon.
Okay, what's the difference between what you were doing last at the Times versus now? What did you have to do there that you no longer have to do? Put a liberal slant on everything? You don't have to do that anymore, right? Now you can tell the truth.
No comment.
Okay.
It's basically it's like, I think I can just kind of cut right to the core of what I think is going on. I mean, it's way more voicey what I write now. You know what I mean? I think, to be honest, covering the markets, it's an interpretive act, right? Like you cannot, there's no scientific answer to why is the market up, right? You have to, even if it seems very clear, you're interpreting. And so like, I think I'm a little bit more straightforward about like, hey, this is what it seems like going on. Here's why I say that.
Well, but here's the thing though. Anybody can write interpretive, but I think you doing interpretive is more valuable given how long and for how many outlets you've been covering this stuff. I'd rather have your interpretation
Thank you.
than a guy with like .eth in his Twitter handle. You know what I mean? Like I feel like it's coming from a place of experience.
Well,
which
thanks.
is
Yeah,
important.
no, I mean, I don't interpret based on nothing. I mean, I'm trying to be honest about what I think is going on, you know?
All right, so good. This is a good place to start. What the hell is going on?
Interest rates?
I don't know, really.
Right? No,
Give me your shtick. What are we living through right now?
We are living through the end of
And don't use any big words because
the
Mike
end
gets upset.
of the Greenspan put. You know, we're at the end of
the Greenspan put.
Yeah, the Fed put this sort of underwriting of easy money policy that began in the late 80s. You know, we're
When did
seeing
it
the
start?
end of that.
1987, Greenspan cut rates in the middle of the day or whatever.
Yeah,
And
the
it
next
worked.
day he came out and just sort of winked and said, "We're going to be supportive."
And it worked.
Yeah.
No
yeah.
press conference back then.
Yeah.
just
I mean,
did the
it was a
thing.
big deal because they never said anything.
Right.
You know, and they came out with this kind of cryptic statement saying we're supportive, basically, and the market went through the roof.
Okay, but so you're saying that doesn't work anymore? Or we can't really do that anymore?
I'm saying we can't. We mean the Fed can't really do that anymore because now we've seen inflation again. We've seen inflation, and even if it goes away next month, we're not going to forget about that. You know, this is going to be a major searing experience for Washington for decades.
Well, we've got midterm elections coming up.
Right.
And what's more important in the short term? Is it the stock market or battling inflation?
I mean,
Have fun with that, right?
yeah. I mean, the stock market, I don't know how. I mean, people are miserable no matter what.
Yeah.
You know, it's like it's not going to help their miserable mood. Like the national mood is just pissed off, you know? But so like the stock market's not going to help.
You have a president with a 35% approval rating. I don't even think he's done anything yet for people to disapprove of.
Right.
This might be the worst setup of all time.
It's bad.
For a president, like going into because you get killed, your party gets killed in the midterms anyway.
Yeah.
That's almost no matter what.
I mean,
and now you have like the worst inflation in 40 years. People are getting raises, but they're mad because their cost of living is going up twice as fast.
right. People can get 3 jobs if they want them, but
This is going to be like a Republican landslide
Yeah.
at the end of this year.
although, yes. I mean, the historical political corollary would be 82, though, which was like a miserable time economically.
When?
1982.
Oh, okay.
You know, Reagan came in. I mean, people forget, but in 82, people were like, Reagan can't run again.
Yeah.
You know, he's like, there was like unemployment really
Well, you and
high.
I were 4 years old, so
Yeah,
what do
it
you
was
remember
brutal.
from that period?
Oh, yeah, man. I mean,
I was
looking for a job.
I was
Couldn't get a job.
-3.
Damn, Reagan. All right.
Baseball card, inflation.
Let's set this up for people. We're recording this on Thursday afternoon, so by the time you listen to this, who knows? It could be a very different day. Yesterday, Powell made it clear that they're not considering 75 basis points.
Yeah.
And the market took off like crazy in the last hour and a half of trading. We had a plus 1,000-point day in the Dow.
Yeah.
Led by energy and tech, and just everything went up. Today is the polar opposite.
We just took a leg lower, by the way.
Yeah, 4.3, I see.
Yeah, so this is this is turning into one of the worst days of the last, I don't know, 10 years. Maybe it'll be on the top 50 list.
Yeah, it could be. I mean, you know, we're back to that 2020 scary.
Can you remember a rally that was given up this quickly of that magnitude? 1,000 up and then 1,000 down on the Dow. I know Mike hates when I talk in points. How should I phrase it? 4%?
Yes, please.
Yeah.
This is a pet peeve of mine with the Dow.
No, I understand.
cannot-
A lot of people get mad at that. All right, NASDAQ down 5.5% after being up 5% yesterday or something. Like, can you remember the last time we've seen something like this?
I mean, it's got to be March 23rd, 2020 when the Fed came out and said we're printing like crazy. You know, because it was bleak, and then it was like,
Right, but but was that it? After the Fed said we're going to do this plan,
it was actually later that week when the government said. So basically, on Monday, the Fed said we're going to print $2 trillion worth of money, and on Friday, the government said, by the way, we're going to spend $2 trillion,
and we're going to
worth of money.
send it to your bank account.
Yeah,
Okay.
and that's kind of really when it went.
All right, Mike.
vertical.
What's this first chart?
Hang on. S&P's down 4%. We've had, I'm just eyeballing this. We've had about 40 of those since 1993. So this is bad. What's this chart that we're looking at? All right. The chart that we are looking at, where's my screen? Pardon me. I apologize. All right. This is from Bespoke. Thank you, guys. We're looking at the daily return after a big positive reaction for the FOMC going back all the way to 1999. And the average is slightly negative, but the only time we saw something worse than what we're seeing today was 2011.
Yeah.
So today's yellow. We're looking at the yellow line.
Okay.
So there's a bad reaction. So to the point of like, how often have we seen this after FOMC specifically?
Yeah.
One other time. Once.
So a react like a post-Fed, but probably most of these days were not a huge up day after
The day
the Fed.
before. Yeah.
No, they were. It's saying this is the
I see.
This is the day
after being
after a big positive reaction to the FOMC.
So this is the second worst day two after
Correct.
a Fed decision is the right way
Correct.
to phrase this?
And we're on course for probably the worst day.
August 2011 was, I guess, the debt ceiling fight in Europe.
That was Europe.
falling apart.
Right.
It was Europe.
Right.
So, all right. There's a lot of talk that somebody's got to be blowing up. So, sentiment trader Jason Gepfer tweeted, there have been 2 days in the past 25 years, 2 days, when the S&P 500 futures were down 3% and the 10-year Treasury futures were down 1%. That was October 9th, 2008. People know when that was, and March 2020. And then he said someone is blowing up and this is forced liquidation.
I am sympathetic to that.
Yeah.
It might be more than one person blowing up, but I don't think that there are fundamental decisions being made.
No.
That you would buy a stock on Wednesday and sell it down 11% the next day.
No.
Yeah.
That doesn't strike me as fundamentally driven activity. So I
what's
think
the-
that's correct.
What's the 10-year? It's at 307 now. I mean, all your hedges are not working.
Well, that's what's
Worse. The
Right?
hedge
Like
is
they're-
worse than the
they're-
thing you're hedging.
Yes. Yeah. So you're terrified.
So throw up this chart, guys. This is like the longest duration bonds. So we're looking at zero coupon bonds and we're looking at TLT. Both of them are by far
crazy.
in the worst drawdown that they've ever experienced. Zero coupon bonds are in a 41% drawdown. Oh my goodness.
Yeah.
Oh my goodness.
This is a shit show. So hold on. So the PIMCO 25-year zero coupon US ETF, I don't know how much money is in that, is down 41% from where? From its high in what?
it looks like from
Oh no, this is from the beginning of 2020.
No. It made a high in. All right, that's true. It has around $360 million in assets in it. But here's the thing. These, in theory, TLT has $20 billion in assets almost. In theory, this should be what spikes when
Yeah.
equities puke.
Yeah.
And the fact that these are puking, it's almost like one is causing the other. And so Josh is saying like, well, where's the money going? It's going to cash.
Well, except that these should be the ones that spike, except if the reason for the panic is interest rate related.
is interest rate
So
risk.
I've
yeah.
said that not only are bonds not buffering the sell-off in stocks, they're causing them.
You know
Yeah.
what? Well, you know what? How big a pair of balls you have to be like very long the zeros with interest rates.
Yeah, it's the
50
most
basis
high
point Fed funds
duration form of bond, like the most interest rate
Correct.
sensitive.
It's all rates.
Bonds go
Yeah.
up 1% and this goes down 90. So the thing that's very weird about this environment, and there are many
Wait,
things.
put up the second one.
Is
Put
the
up the
second chart.
Okay.
So we've got the 3 to 7 year, so intermediate term bonds, government bonds, treasuries, Uncle Samuels are in a 10% drawdown. That's worse than high yield, than junk bonds. And normally credit spreads would be blowing to the moon right now.
Yeah.
And they're just not. So what the hell is going on?
There's actually, but if you look at this, isn't there some precedent to this?
No.
No.
I mean, what's going on, I guess, is that
No.
Wait, what am I looking at?
No.
I mean, all the junk bond issuers have locked in.
They have
ton of
so much
cash.
money right
A
now.
lot of them are energy companies, that
Yeah.
too.
Yeah,
But-
yeah, right.
But look at the purple line. Every time there's a dip, the purple line crashes relative to the orange. And I'm talking about junk versus intermediate term bonds. This is weird. This is very, very weird.
It's weird to have a 7 to 10 year treasury acting worse than the junk bond index.
Yeah, people,
is weird.
People, and these are bonds that people own,
Right.
regular people own.
Right.
What are
right.
you saying when you look at this environment that we're in? The stock market's acting like the end of the world, but spreads are not blowing out at all. Is it just a function of how much money has been raised recently in the debt markets and
Yeah.
everybody's locked in at a low rate?
No, I think that's it, and I think Michael, you nailed it in that. The energy component of high yield is huge, and so
It's probably 30% or something like
yeah,
that.
I think I've seen even higher. So and especially even some of the edgier stuff.
So if you had the debt of an energy company right now, you probably
Probably
feel
okay.
better than you would feel owning the debt of almost anything else.
Yeah, for sure.
Okay.
for sure.
Okay. How long can that last though? Don't companies have to start rolling debt at some point?
Yeah, but as far as I know, and my editor Kate Marino used to work at DebtWire, so she's really like
Shout out to Kate. Yeah, we have stuff.
Oh,
too.
you know, she's like really locked in on credit world, and she says like, but there's like really no like looming maturity wall or anything. Like these guys are sort of fine for the foreseeable.
They've had a couple of years where you could sell anything to anyone, and they did.
Yeah,
and they took advantage of that.
You know what else is in the worst drawdown of the last 10 years? By far, Amazon, Facebook, and Netflix.
Oh, yeah.
And you expect Facebook and Netflix to be on this, especially Netflix. All right, whatever. But like Amazon, everyone that owns stocks owns Amazon.
Yeah, a lot of it.
If you have a retirement portfolio, you 100% have a lot of Amazon and Apple, and you're just in these stocks.
And Amazon's down almost 40 from its highs.
I think Netflix is the worst performing stock in the index, the S&P this year. Last I saw it was down 67%.
I would believe it. I believe it. All right. So what's your big takeaway from what went on yesterday with the Fed's decision? Because the controversy today is they should have done 75. That's not my read of it at all. I just think they put it off too long.
Yeah.
And the market almost like is blowing by them at this point.
The market tightened.
Yeah.
Correct.
Yeah. I think, well, yesterday obviously was like, you could see it. It was like a rocket when he said we're not doing 75 anytime soon. I mean, I think that it's kind of wonky, but the productivity numbers this morning, the unit labor cost number there.
Say more for the audience that's not fully aware of that.
So each I think quarter the government puts out productivity numbers that show basically GDP, GDP basically broken down by hours worked. And
is productivity a residual? Because like, how do they calculate it?
Kind of is. Yeah. It's just like hours worked divided by GDP, basically.
And it showed what? What did we say?
It showed productivity went down a ton, which is like, I've always kind of been skeptical. Like, that's kind of good because it means people are getting paid more.
Josh was slacking this quote. I've been saying.
Yeah, my productivity is through the floor. So,
right.
Yeah.
Right. But the thing, there's a underlying breakout of labor costs in there that basically just shows they're sort of off the chart. And like, it's the kind of thing that like anyone trained in like monetary policy is going to say like, oh, wage cost spiral. We got to drop the hammer. We got to cut this off at the knees right now. And so the combination of like
Bank of England said something about inflation too. What did they say?
Bank of England came out and raised hard and said we're going to do more. And it kind of made Powell look like a weenie a little bit.
Yeah.
And so I think it changed the
That's the title for the show, Powell's a weenie.
It kind of opened the Overton window, of rate hikes. Like,
how is the Fed funds rate at 75 basis points?
The Overton window is like something
the realm of the possible.
Like something like you're like making the possible discussion go in a place that prior to like nobody could.
Thank you for translating for the audience.
You're saying?
Yeah, exactly. It was stuff that was considered unthinkable now is slightly more thinkable.
Right.
So
what the Bank of England did, they have kind of been ahead of the Fed for a while now on inflation.
Yeah, definitely. I think they were worried about the
I think Europeans in general are more worried about inflation, or some European countries.
Yeah.
Because their grandparents all told them Weimar Germany stories,
right?
I think.
Right.
Okay.
And it's old. There's like the demographics there. There's a lot of people on pensions. They vote.
This stuff just blows it up.
So, Matt, you spoke about this being like the end of easy money the Fed put. We're finally allowing some runoff up to $95 billion a month. And we're on pace for the Fed to shrink their balance sheet by $3 trillion over the next 3 years. So I was writing yesterday that I think what is over are the V-shaped recoveries. Like, I don't think the market's going to be at a new high in 60 days from now. Yeah, it's hard to see that when the Fed removing so much liquidity.
Yesterday, weren't you like, oh wait, this looks V-ish?
Yeah.
I know it didn't last, but I would have said the same thing.
Yeah. No, I'm kind of getting more sympathetic to that view. It's like
no, yesterday I said the V's were over, even though yesterday looked like the beginning of the V.
Right, I wasn't saying that, but I'm coming around to that. It's hard for me to picture us. I agree with you. It's hard for me to picture us making a new high in the next 60 days, but 60 days might have actually been long. We made a. I think 60 days was how long it took to make a new high after COVID.
No, it was 140.
140. Okay.
Yeah, but no, it was fast.
Yeah,
and then all 2021.
Yeah,
we would have right. So the worst pullback you had in 21 was 5%.
But so
and
if
it was
we're
rectified within a week.
If one of the rallying cries of the last 30 years was "Don't fight the Fed,"
or buy the dip,
right, or buy the dip, same thing. But like now it's in reverse. Like, why would you fight it?
Right. I mean, it's interesting. And so many of the people that came out and bought the dip, originally, like we were talking about GameStop earlier or whatever, like those people, they were trained to buy the dip because it was, and it was, everyone on the street bought it. And then sort of everyone, on Main Street started to buy it.
Barron's did a piece last weekend that basically called 3% 10-year Treasury the line in the sand, meaning like that's where people's calculus gets very different about taking risk in the stock market or not.
I think that's true. I remember talking in 2011 and then again in 2018 when we got there at 3%, talking to bond fund managers who were like, I know rates are going up, but I told myself if I ever saw 3% 10-year, I'm buying it.
Yeah.
Okay, here you go.
And then,
Nobody seems to be
also
buying it
think,
today.
That's true.
If things do get harder from here, and I think they're going to, and we're going to get back into the motion, but just taking a step back, it's okay. We've literally done the S&P has literally done 15% a year for 10 years. Did you not think it was going to get harder?
Yeah, 27% last year.
The problem, though, as always, is that the lion's share of new investors who came into the market in that 10-year period all did so 2 years ago.
Yeah.
That's the problem.
Why is that a problem?
Well, it's a problem for them. We went through the first 8 years of the last 10 years. Will millennials ever invest?
But it's not a problem for them. It's a good thing.
Well, I know that, but it doesn't feel that way.
Right.
Wouldn't feel that way to me, at least.
I also think everybody would sign up for a sideways 2-year market. Like, all right, given the run we've had, if the worst we get is a side year, but the thing is, people aren't worried about that.
Right.
They're worried about down 40%.
Right. Yeah. If there's an upside, it seems like a lot of the stupidest things that people have been doing with their money are not in the stock market.
Yes,
You know
I
what I
agree
mean?
with that.
So maybe
you won't see those things. You won't see them blow
like
up.
a 57% drawdown that we saw in
but
99 or whatever.
It's so crazy how quickly the environment changes. Like stocks were up 8% on stock split announcements.
Yeah.
And not small stocks.
Not long ago.
A year ago.
Yeah.
Tesla stock split, Apple.
I think Apple was even more recent. Or Alphabet announced the big one and
Shopify
rallied.
going up every single day. It was down 70% going into earnings, and it fell whatever it's down today. What is it down today?
What do you make of the pace of shrinking the balance sheet? So they put a monthly cap on it, $95 billion max. They're not selling bonds out of their portfolio. They're going to allow up to $95 billion worth of bonds to mature
And they're not
and
gonna
not
reinvest.
replace them
Yeah.
with new bonds. So that's, it's not big in the context of the size of the Fed's balance sheet.
Yeah, what is it,
but
$9
it's-
trillion or something?
Yeah, but it's big though.
But isn't there a cycle?
That's a lot of money. That seems like a lot of money to me.
There's also
$95 billion a month.
There's a huge psychological component because
Yes.
even in March 2020, when the Fed said that they were going to start buying bonds,
Yeah.
that was the end of it. And they didn't even really buy that many.
Right. No, it's huge. It's the government saying
We got your
free
back.
money.
We got your back. And now they're not saying that. It matters.
Yeah, for sure. And they've been saying it pretty much continuously since 2008, and now, but it's not even just that they're changing their policy now. It's that we have seen the beast of inflation, and that's not going away, and they're not going to behave the same way for a very long
All right.
time.
So when do they cut rates?
Yeah, they'll be cutting rates
Right,
next month at this pace.
Yeah.
All right, so they're not as focused on the health of the stock market as maybe we thought they used to be.
Yeah, I think so.
Your
I think
big
that's
thing
right.
was the Fed watches the 200-day moving average.
I still think that's true.
But you still think that they're?
I just don't think it's priority number one
I think
anymore.
now it's inflation, right?
Yeah.
Yeah.
I thought that so long as what you said is right, so long as inflation was a non-event or they were trying to produce inflation and couldn't even do it.
Right.
So long as that was the environment, I think the stock market was job number one.
Yeah.
Tied with actual employment data.
Yeah.
And then when the employment data was going their way for years at a time, it really just became the stock market. And then there was a huge distraction with Trump, and then now it's this.
And so now the story is investors have no more appetite for subsidizing money-losing companies. That game is over.
Yeah. But let me ask you guys this question. Why? This is something I've struggled to explain to people, and I've tried in different ways, and I kind of have a sense of what the answer is, but why would super low interest rates make people
It's duration.
right?
It's the same exact thing as a zero
Make
coupon
people
bond.
make
Wait,
people
but
what?
make people give their money to money losing companies?
It's the same exact. If money costs nothing,
Yeah.
and you're going to pay me back 10x in 10 years,
Right.
Or I can get,
or there's a chance you will. But
then good enough.
So basically, there's no better option.
I think the casino aspect to the market pops up in every era.
Yeah.
After a really big run.
Yeah.
And in this case,
It was real.
you gave cash to people who never had any.
Yeah.
And this is what they chose
That
to
too.
do. This is what they chose to do with
Yeah.
it. I mean, I
Well, I
hate to say
quoted
it that
you in
way.
a story in at the Times. I quoted you in a story about like the sports gamblers.
Was I bullish or bearish? That's
No,
probably-
you were sage and wise, and you
Of
basically
course.
said,
Oh,
it was like sports bettors who were coming to because remember people forgot that literally gambling shut down.
there was no sports.
There's no sports to
Yeah,
bet on,
yeah.
and so in like the spring of 2020, people were like, I know a game that's open.
Well, so I was making this point, like let's say the Robinhood app went down. The person wasn't like, oh, let me open the Fidelity app. They're like, oh, let me go on DraftKings.
Right.
It's like a pastime.
Yeah,
Not
yeah.
anymore because it's not fun anymore.
Yeah, maybe not.
Okay.
So these names were like they were like alt stocks, right? And they were just like all the fun and all the hype, and it was psychologically like to Josh's point that investors were, but it was also just actual investors subsidizing, like venture investors
Right.
subsidizing losses. And Lyft came out and said that they're investing, and Spotify is still investing, and when you're losing hundreds of millions of dollars, like that's cool when money costs nothing and investors are willing, like we've got your back.
People don't want to hear that anymore.
It's over.
You mean institutionals?
Yes.
Yeah.
It's
yeah,
over.
Yeah. Yeah.
Let's talk about the demise of the dollar, because I get all my news from Bitcoin maxis on Twitter, and I've been told that the dollar is trash or going to zero or fiat or worthless or whatever.
This is a weird one.
This is weird. Why is the dollar at a 20-year high? What's going on here?
Rates, higher rates.
That's it? That
yeah.
simple? Why
Yeah.
didn't everyone foresee that then? The Fed told us they were going to start raising rates in December. They
Yeah.
said 3 rate hikes this year, LOL.
Well, it's also China too. Like the global economy is slowing down because China's like
COVID lockdowns.
got 50 million people trapped in their houses, and because they don't want anyone out and about.
Yeah.
So it's a combination of that. So China has been weakening its currency. That has an amplifying effect. But yeah.
But it's relative rates, right? Because the dollar is a basket relative to other currencies.
Right.
And you would just think that, okay, inflation up, dollar down, but actually no.
No, yeah. Well, it's because it shows the Fed is going to fight inflation, and they think they're going to keep
forget
raising.
the dollar is always a pair.
Yeah.
It's not an absolute. It's the dollar versus what?
And interesting, a lot of it's the yen, and the yen, they still don't have much inflation. I think
Yeah.
that no, I'm not a trader, but
think
I've
they're
often
lying.
thought I've often thought Japan would be an interesting spot to put some money now because they're still printing money.
Yeah.
And they show no signs of stopping.
And look at Europe. Put up the Jeff Kleintop chart. April saw the strongest European outperformance of U.S. stocks since January 15. Is that just because
It's
they
all
went down?
tech.
Did they go up though?
No. I think it's all relative. It's relative. So it's tech on the performance. They don't have Amazon. They don't have Amazon and Netflix.
So they didn't get the benefit of all these big tech giants on the way up, and they're not bearing the brunt of it on the way
we've
down.
said it's like really difficult to think how the European stock market could outperform the S&P 500.
yeah.
Only on the way down.
Here we are.
Yeah.
No, I'm saying on the way down, but that was inconceivable that Apple would fall more than their stocks. It's
Right.
happening.
Right. So the way Europe outperforms the U.S. on the way down could only be that our tech giants are the leaders.
It's the same
way-
trade
Yeah,
because
yeah.
they have cash flow producing companies. They're cheaper. They have higher dividend yield, higher cash flows. They're lower duration
Dude,
stocks.
resources, mining is
Yeah.
a huge part of their
commodities,
index
the
there. They have commodities.
UK, France.
Okay.
And one other thing, we've been looking at charts like this forever. This one I think comes from this is SocGen, I think. Looking at the relative valuation of European stocks versus U.S. stocks, and it's been a downtrend. This is nothing new, but
Let me read this. This is from Reuters. Reuters. Jamie McGeever. European stocks are the cheapest relative to U.S. stocks since at least the late 1980s.
wow.
There's a reason for that, of course. Are they now cheap enough so that gap starts to close, or does war and gloomier European growth outlook keep them cheap?
But isn't Europe heading right into a recession?
I mean,
And war would be good for the stock market. I mean, it's like industrial, capex. It's defense stocks. It's not a bad.
I don't know
thing.
if it's good for you. I don't know if it's good for European stocks.
I mean, I guess it's the energy.
They're so
It depends on
reliant
how
on
much
energy.
on the energy from the Russians. Yeah.
European equities are, what is this? Is this book value? Oh, forward PE ratio. European stocks are selling at a 30% discount on a forward PE ratio to the United States now, and they have not been at this cheap of a valuation. It's really off the charts.
Yeah.
Actually. So, but again, they're just higher. They're harder to buy, given everything that we've said before, which is if the U.S. stock market's going to crash, or if there's going to be a U.S. recession. I just don't understand how Europe avoids and they have the same inflation problems we have here.
Yeah.
And maybe worse. Theirs
Is
might
it
be
worse
more
or-
intractable.
Yeah.
So, do you cover international stuff as much as maybe?
Yeah, I keep an eye on it because I
Okay.
think it's important. I mean, I think a lot of this is about China, and we haven't been hearing so much about the Chinese lockdowns, but it's only going to make actually, Powell talked about it yesterday. It's only going to make the inflation.
That's another
more
thing that he
difficult.
has no control over whatsoever. That's exacerbating inflation. Is if you start locking down cities like Shanghai.
25 million people.
Yeah, and not to mention all the stuff that you need to leave there and go elsewhere.
Yeah.
Okay. Do you have a view? Like, how are we over or underestimating the rest of this year in inflation picture?
I don't.
We're
don't
gonna hold you to it. Too,
I don't.
so.
I don't really know, obviously, but like, it's so uncertain. I don't really know because it's the supply chains, right? Like, if this China thing, this China thing that's happening right now is going to burble through for the next few months, keeping things up. But we've seen other stuff like used cars starting to come down a bit.
I don't think it's likely, but this would really mess people up if we get supply chain issues in order and inflation doesn't abate.
Yeah. But I think
I don't see how that's possible, but
I think the term supply chain isn't even helpful because what we're talking about is like the global economy is in giant disarray. You know what I mean? That's like, it's not just like
is that bullish?
it's not just like clicking a few links of a chain back
Yeah,
here.
we
Like
fixed the supply chain.
Yeah, it's screwed up. It's like the system that underwrote the growth over the last 30 years is broken to a point where we don't know if it's going to make any sense to bring it back. Like, look at the Times had a great story by Gina Smilik today about and Anna Swanson about shipping costs, right? Like, if shipping costs are that elevated, all the outsourcing doesn't make sense anymore.
Maybe you don't want to ship anymore.
Right.
Maybe you
So-
want to onshore.
Right.
The same thing with COVID. The amount of like dependence it turned out that we had on all these countries. This is way prior to inflation. Just straight up, like, can we get things or not?
Right.
I think was a big moment, like a reckoning.
Yeah.
And people are like, wait, why are we building all this stuff overseas?
I mean, thank God it's not like been a bloody event, although 1 million Americans are going to have died of this thing. But it's like, this is like a World War II level disruption.
Yeah.
Like, it's not, things are not just going to like,
Snap back to the right. You're probably not going to revisit the way things were.
I don't think so.
It is interesting to think that like COVID started over 2 years ago, and now that we're just now starting to feel the ripple effects, but it took like, I don't know, almost 2 years.
Yeah.
You did this post about economic output in selected sectors by quarter. So I guess you're talking about the housing investment versus spending on recreation services. Do you recall writing this, or was this one of your ghostwriters?
No, it was me.
Okay.
It was me.
We have this chart right here. The purple line is housing investment, which I guess by the end of 2021 was $701.5 billion. That's an annual inflation adjusted number.
Yeah.
What is that? What is encompassed in housing investment?
Home Depot.
Yeah. No, I mean, it's everything. It's home
So the house and everything else that goes
remodeling,
into it?
building houses. Yeah,
Okay.
fixing them up.
So for context, in 2011, that was under $400 billion.
Yeah.
So we've just about doubled the amount of money we invest in homes in this country, and that's inflation adjusted.
Yeah.
It's a big deal.
Yeah.
And then the other line is spending on recreation services, which of course collapsed in 2020 and has made it about 80% of the way back, $450 billion a year. So, but we're spending almost 2 times as much on housing than on recreation.
Yeah.
What do you think? What do you think these lines look like a year from now? They get closer? Does one turn down?
I think recreation will go up, right? That seems to be what everyone's saying. Traveling, gambling.
Could
all
these lines
fun
cross?
stuff.
Is that possible?
They did. Yeah,
They
I'm
did.
saying,
Look,
I'm
2011.
saying, can we see that in 2023, 24?
Again, I doubt it unless there's a massive housing bust, right? Like that's why they were that low back then. I don't think we're going to see a housing bust because in the same way that the Fed is not going to forget this inflation, like people cannot get houses if they want them without a huge hassle.
And you're not going back to a rental apartment, like you personally.
No.
I know I'm not, but I'm much further removed from it than a lot of our listeners maybe.
Yeah.
But like you just told us you're a country bumpkin now.
Yeah.
You're in Westchester.
Yeah.
You're going to keep investing in your house because what else are you going to do?
Right. No, right now I'm trying to find somebody to like take out a wall.
You
move
and
some
everybody
pipes.
else.
Yeah.
Duncan can do that shit. We've had him do some like
Really?
handy stuff around here. Yeah.
Seems like a
Anytime.
You want to go to Westchester tomorrow? I don't need you.
Sure.
You want to knock out a wall?
Yeah.
Okay. I need somebody to put on a doorknob. My teenage daughter slammed the door so hard last night.
What did you say?
The doorknob flew off the door and hit the wall. Big, heavy metal doorknob.
Oh.
I've never seen anything like it.
Oh,
Teenage
man,
rage is
I'm
like.
dreading it. My daughter's going to turn 5 in a couple days, and
you
she
have-
already.
You
can-
have some time.
Yeah.
You have some time. I was talking to my wife about it this morning. She was saying little kids, little problems. Big kids, big problems. So my kid's taking her AP exams this week.
Oh.
And my house is I'd rather be here. I'll tape 8 podcasts tonight rather than go home. I
cool.
swear to God. It's too much.
What-
Go ahead.
What's
do
she
you got?
taking? I'm just curious what she's going to take.
AP World. She's like me. The subjects she likes
Like
are my
history
subjects.
and-
English, history,
A word person.
and math. She's just like bullshitting her way through. I mean,
Cool.
you're not going to any like school that she wants to go to if you don't have good math.
Yeah, yeah.
But she hates it.
Yeah, yeah.
So anyway, there's a lot of doors. There's a lot of door slamming. What's this gross domestic product chart? John, throw this on screen. Every time I say on screen, I feel like Jean-Luc Picard.
Yeah, I think that's GDP. I think it's just like the good old-fashioned American economy there.
So we're a $20 trillion economy, and $7 trillion has been wiped out of the NASDAQ year to date.
yeah. I think
Does
that's
that go back into GDP somehow? What do we
maybe,
do?
Maybe. I don't think so. I think
think-
that just is vaporized.
I can't remember if I'm getting this backwards, but I feel like Ben and I were saying that the economy could outperform the stock market. This was like back in the early stages of COVID. I might be misremembering that. But I think that the economy can definitely outperform the stock market.
Yes, this is a big hobby horse of mine. It's just like stock market is not the economy. Like, there are different things. There's different logic undergirding both of them.
Which do you think drives which now?
I don't think they have anything to do with each other. I
Yes,
mean, I
they
think
do.
I think obviously the economy is driving it because of the inflation. The economy is driving the market. But I really don't think they have a ton in common. I mean, it's like, this is my shtick about this, the stock market and the economy. It's like trying to assess the health and athleticism of the American public by looking at the NBA. You know what I mean? They're like,
That's actually very
it's
funny.
like the most refined.
The best businesses in the world
Yes.
are publicly traded.
Yes.
Well, used to be that way.
Well,
Now you could list anything.
Here's
Right.
why I think that we could have that dynamic, because you can have a mild contraction in the economy, and if investors are like, all right, but we're not paying 22 times earnings for Apple anymore, we're paying 15.
Right.
That's it.
Right.
Well, in
right.
that way, they're disconnected. But I'm a big believer that the wealth effect is driving the bigger home purchases and is making people feel more cavalier
But the wealth effect of
about
stocks.
what size SUV they
Because
lease.
people are borrowing against
Yeah, the
their
wealth
But is that
effect
their
of stocks.
house or the stocks? Because housing
it's
is
both.
Housing is a much bigger.
people borrow against their portfolios a lot.
Really?
Like people with
more
money.
than you think.
Wow.
This is
Like
it's
Elon
a
Musk.
very old thing that's come back around in the last 10 years.
Well, that'll be interesting because you don't usually want to use the kind of volatile collateral.
But that's what wealthy people do.
So
must be nice.
so Wall Street sells that as a product.
Yeah.
They say you have to unlock the value of your portfolio. Apparently, that doesn't just mean make the portfolio going up. And then the other thing they say is that you have to take advantage of both sides of your balance sheet. So they make money.
Yeah.
So if you're a wealth manager at a large firm, I won't name any names
Yeah.
so that we don't get any emails, at a large Wall Street brokerage firm, they're highly incentivizing their financial advisors to convince the boomers to borrow against their portfolio.
Right. Right.
Now, history's on their side. Most people are not even living off the money in their portfolio. It's crazy, but they've saved so much money and the stock market's gone up so much they don't even need it.
And they're not like
Wow.
levering. They're not like going all in.
No. You get a certain borrow rate against treasuries. You get a little bit less that you could borrow against stocks, but they are doing it. And
So it's not like these are like dividend collecting people.
No, you could own. No, they are. They're normal people who are just being shown a way to borrow money without an underwriting process.
And you could use the dividends to pay down the loan.
right.
I see.
So it's not a margin loan. You can't buy more securities with it.
Yeah.
They
okay.
will send you a check or a wire for $250,000 against a $2 million stock portfolio. That same $250,000 15 years ago, like you would have gone to a bank and borrowed it. Now they're just like, sign the paperwork, don't take the money out until you need it, but know that it's there and ready. And once you have that established, you're on vacation, you're in Cape May.
Yeah.
You see a vacation home. I think we should do this. Let's call our broker. Not let's call the bank. Let's
That's
call
really
our financial
interesting.
advisor and the financial advisor will then get another revenue stream on that money that they're lending.
I think the Times did a big story about this, like
Yeah, this is
contributing
ringing
to
a bell.
more wealth inequality. Is
Yeah.
because they're not selling stocks and they're not selling their stocks and paying taxes on the gains.
That's
They're
right.
just borrowing.
Right. It's a way of like sort of manufacturing income.
The only thing they can't do is buy more securities.
Yeah.
But they could buy a boat, they could buy a house, they could pay for a wedding. So it's having your cake and eating it too. I never have to sell my stocks and bonds.
Yeah.
The Fed is making it that way. And I could borrow very cheaply against them. And I don't have to go through all this paperwork and this whole process.
Now, what happens if your portfolio tanks?
Oh, well, we're going to find out tomorrow.
Yeah.
No, then you just you sell.
But it's not like a margin loan.
You,
don't have to-
sell a little more. You sell a little more ARK, you'll be fine.
It's kind of not like Apple's still hanging in there. Apple's only 40% off its highs. It's still a $2.5 trillion market cap. I feel like Apple is like the 10-year in terms of everything trades off
Yeah.
of it. Or the Fed funds rate, I guess I should say.
Yeah, I
everything
don't-
trades off of it.
It'd be interesting to see because I haven't looked at Apple bonds, but like I know Microsoft bonds trade inside treasuries. You know, they're actually lower yields.
I have more faith in Microsoft than I have in Congress. That makes perfect sense to me.
Oh God, I might.
I have more faith in Tim Cook than I have in Joe Biden. It would make perfect sense for me to buy an Apple bond with a lower coupon.
Yeah. I mean, I don't know about the faith or whatever, but like.
Gotta have
It's an
faith.
easy. George Michael. I agree. A wise man named George
Got it.
Michael. said
We were
that.
talking about like consumer spending and housing and recreation and stuff. Throw up this chart about concerts. So it's another thing like where we have the full reopening, people are going back to living their lives. When does spending turn south? Like this is, if we do get and we're looking at a chart of sales of concert tickets. I don't know.
Is the
people
blue
actually-
line estimated or actual?
No, that's fourth quarter.
So hold on. So fourth quarter 2021, 173.3 million concert tickets sold.
Like by far an all-time high.
It was zero.
So I
first
was-
quarter
I
of
was-
2020.
I was
Did these concerts occur though? Like, did they actually
That's a good-
happen?
that's a good- that's
It's
a good point.
all
Like,
Hootie and the Blowfish.
I was
that
joking.
whole-
I was joking with Ben. Like, can we see a recession where consumer spending goes up? And obviously, the answer is no. But
Is it?
Yeah, no, we just had one. We had one.
fine.
In COVID.
No, not a COVID recession. A normal
Do we
recession.
have a recession where unemployment stays under 5%? Because I think we're about to.
Yeah,
Because
right?
unemployment doesn't factor into recession calculation. It has nothing to do
GDP
with
at
it.
all. Yeah.
Well, also
It really
the way that they
doesn't.
calculate it is just like a general slowdown of economic activity, whatever that means.
Well,
Two-
there's
two
weird
quarters of
things.
contraction.
Yeah, that's what it is. Technically, but it's like weird because that last negative GDP print we had was like largely driven by the surge of imports, which is actually good. It goes to what you're saying about people buying a bunch of stuff that we had to get from
Yes.
abroad.
Yes.
So it's a weird. GDP is a weird thing. Is GDP the economy? I don't know.
It's really not. But
No.
it's the best we have.
Right.
It's so outdated. But what else are you
no,
going to
maybe
use?
the economy is just the friends we made along the way.
I think that's right.
That was a
Michael.
Hootie and the Blowfish line, wasn't it?
I think it might have been.
Yeah.
You write a lot about Wall Street. You think that what happened with Bill Wang and Archegos has more meaning than just that specific case. And I read another article someone else wrote basically saying the same thing, that is a wake-up call, that these people that are now looking at this stuff really want to jail somebody.
Yeah.
And the market rigging stuff is going to be taken very seriously now. So tell this is you. If you're trying to understand how Wall Street works, never let an epic screw up go to waste. When something goes wrong, and even better, criminal indictments arrive, that's when you see how things actually work. Is that that's your quote?
That's me. Yeah.
Okay. So what are you saying here?
I think we saw that the banks have a lot of exposure to somebody like no one had heard of Archegos. You know
Yeah.
what I mean? I was talking to a guy who was pretty well connected on the desk, and he was like, after the bust happened, and he's like, yeah, I'd only just heard of these guys like a month ago.
Yeah.
And that like snuck up, and it was not insignificant losses. You know,
It's a family office. It's his own money. There's no client facing. There's no
yeah,
Right.
and it's all derivatives. You know what
Yeah.
I mean? There's like all this stuff is very, very in the dark. Like, you know, what if this happened with a real big fund?
Yeah.
You know what I mean? Like, there would be banks that would be really hurt by that.
So his lawyers were negotiating with prosecutors like 2 days before they scooped him up.
Yeah.
And I guess the gist of what I read was like, expect more of this. We're not going to do this thing where your lawyers get to take us out to lunch for 2 years and figure out a way to not jail somebody. Like people are going to be jailed. You think that's going to be the case too?
I don't know. I mean, I'm not a I'm not an expert on how these indictments and prosecutions go, but it seems to me like some of the stuff. I mean, maybe I shouldn't. Some of the stuff in the indictment seemed a bit thin. Like, I mean, unless they have a lot more. You know, it was like he bought aggressively in the last half hour of the day. It's like, well, that's kind of when people buy, you know, and when people trade. Like, there was a lot of stuff that didn't seem particularly damning.
Well, that's the manipulation part.
Yeah.
Is he trying to make it appear as though there's more demand for the stock than there really is, which brings in other buyers?
Right.
That's the question.
But what, you can't buy shares at the end of the day if you have a
better
view?
not. No one's doing that today, thank God. We don't have that problem today. What the hell is with? I mean, I don't know what you could say here. What the hell is with Credit Suisse and Deutsche Bank? Are they in some sort of a competition to be embroiled in like league table? Who has the most scandals in a year?
It's not great. It's not.
Is it
it's not
because
a great
they're foreign
performance.
and the people they have representing them here are like not afraid? What is really going on?
I don't know, man. I'm not an expert on the European banks, but it does not seem like they are well-run institutions.
Yeah, I would keep it that way. All right, what are we doing the last good quarter of earnings?
Whose note was this? Well, doesn't matter who the note was, but they were just, maybe this is Bank of America. Earnings are still coming in okay.
Yeah.
It was the guidance that was destroying a lot of places. So Apple, for example, which is the consumer, right, just had their best.
Hartnett at B of A.
Apple had their best March quarter ever. Yeah. And so the problem is you don't get credit for what you just did, right? And the guidance at a lot of places for not Apple has been really pretty bad.
Yeah. But the revisions haven't been too bad. I mean, like it's there's still, I think the last forecast I saw was about a 10% increase out full year. You know, it doesn't seem too bad. It seems mostly the valuations. I wrote a thing about this a couple of days ago. I mean, it's the valuations, and that's all interest rates. It's just like an upside down.
And investor psychology.
Yeah, right. Yeah. And
Hartnett saying stocks always lead the news. So with stocks trading terribly since last fall, they were warning of bad news to come. Is that too easy to just turn around and say that? First were the high multiple stocks getting kicked around November and December as they sniffed out the Fed's aggressive pivot on policy in January. Now they're figuring out that first quarter may be the last good quarter of earnings as higher costs and increased recession risks weigh on future growth. I actually think that's true. The recession might be premature, but certainly higher. I mean, obviously.
We keep talking about this. We haven't seen this in the data. We haven't seen inflation change people's spending behavior yet.
Yeah.
It has to, no?
Well, I mean, like in theory, like if inflation is just going, people spend more to keep up with it, right? Like you have an incentive to spend when inflation is. That's why in Weimar, Germany, right? Like people would just like get their pay at lunchtime, run around with a wheelbarrow and buy a loaf of bread. You know, because they knew by dinner time it would only buy half a loaf of bread.
Yeah, in nominal terms, they had really fast economic growth.
Yeah, right. So you gotta spend money when in an inflationary environment. But I think this is an interesting point. Like to your point, Josh, about whether this hits people's spending. I mean, that's when the margin compression story comes in. Like if people stop spending a little bit because their stock portfolio is down and maybe they don't upgrade their
bathroom. We're not seeing yet.
So, well, two things on that.
Not yet, yeah.
Two things on that. What's your take on this? We haven't seen that yet. Because I still think we're coasting on the fumes of all the stimulus, and people are just like they're okay. But the second thing, where do the earnings in the S&P come from? Because if you tell me like cloud computing, is there going to be margin compression at AWS?
No.
If so, why?
Right.
Server costs? Like it's not.
Well, although maybe getting those servers, getting the chips, getting all that stuff.
But let's assume they've been able to do so far, so it probably doesn't get worse.
Right.
So you might not see the same level of margin compression that you have historically seen as a result of inflation like this.
Stocks still get killed.
Well, they're killing them anyway. All right, this is what Hartnett's, quote, paying less attention to the relative strength of the U.S. consumer and more attention to U.S. corporates given the potential feedback loop. 1, lower share price. 2, then budgets get reassessed. 3, then there's layoffs. 4, consumer slowdown. 5, earnings per share slowdown.
Yeah.
And then 6, however you think that ends. Probably
one
World War III or
I hope not. One question I had is like, so if you're kind of trying to sink the economy into a soft recession or growth slowdown or whatever, how does that stimulate supply? You know what I mean? Like
That's the problem. It
right?
doesn't.
Like
it just takes the pressure off
what
supply.
if they can't get inflated? What if we're already in a stagflation that we can't
But they're
get
just
out
trying.
of?
It sounds like they're just trying to cool demand,
Right?
which
It's tough,
doesn't
tough to do.
Doesn't fix supply.
It's not
but
that
it
tough to do.
Balances the equation a little
It
bit.
just takes a long time. They're doing it.
Yeah, yeah.
There's no question. There's no question.
Without sinking us into a recession, I mean that's tough. That's tough.
That's the needle that they probably can't
Yeah.
thread. But if everyone gets the vacation out of their system this year, which it appears that they're all doing, right?
Yeah.
Like that vacation that you've been putting off for 2 years, pay any price for it, go do it. Okay, fine. They'll do that. Mortgage rates at a 30-year high, or at a how many? When was the last time we were above 5% on a 30-year mortgage?
I think it's
2008?
2009. Yeah.
14-year high
Yeah.
ish.
Yeah.
Okay. Mortgage rates at that level will 100%
Yeah.
put a ceiling on home prices and cool demand off.
Yeah. It takes a while, but yeah.
Well, that's a big part of the supply crunch. Can't get lumber, can't get labor, can't get this, can't get that.
Right.
So you can do it. The thing is,
But that's
you can't
the-
do it in a month.
But that's the demand. So like, what about the guy who runs the lumber mill? Right? Like he sees
Well,
he sees
We're not,
he
we're not
sees a
worried. We're not worried about him.
he sees a recession coming.
Yes.
So is he going to produce more? You know, like I mean, like that's the thing we're in this weird loop where like we need to get supplies up and people say, oh, well, we'll just like cool demand and then supply will catch up. But like if I'm a producer, why would I produce more if I see a recession coming?
You wouldn't. So you're saying that actually could have the perverse effect of crimping supply further.
Yeah.
Right.
Maybe. I don't know.
Another
But that
weird-
seems logical
It's a
to
good
me.
point. I hadn't thought
Another
of.
weird dynamic that we saw in the market last week, which is now reversing, was dividend stocks finally getting killed.
Yeah.
They had been holding up really, really well as investors are looking for a safe space. But now with the 10-year at 3%,
Nothing
people
safe.
are like, well, I'm not hiding out of dividend paying stocks. I'm going to actually buy the 10-year, right? Like bonds are making those things relatively less attractive. And then today, on the heels of a disgusting 1,000-point Dow day or whatever we're down, these things are getting a bid, or at least they're down less.
Yeah. Yeah. Well, I mean, I think in a world of bad, less bad is good, right? So,
But not just for the dividend. Think about what those stocks tend to be. Like you would be a buyer of a company that's a real estate investment trust for hospitals if you're looking for some version of safety, or a utility stock, right? Like I feel like it's part of it is, oh, those dividends are now more attractive after this has come down this much. But part of it is these are defensive stocks.
yeah, both
Yeah.
for sure.
I own some REITs that were yielding 4%, or that were yielding 3%, that are now yielding 4%, like 3 weeks later.
This is
what?
Yeah.
This is a face blower right here. The Russell 1000 Value Index.
You know what really blows Mike's face?
The Russell 1000 Value Index
Yeah.
is down, is in only a 7% drawdown. That's it.
Versus growth, what's
No,
do you know
just relative to itself. It's
Oh, wow.
7% below its highs. The Russell 2000 growth, for example, so now we're comparing large value to small growth. The Russell 2000 growth is down 33% from its highs.
yeah.
That's unbelievable.
that
When do they
smells
do the
like-
rebalance? This spring, right? It's
Russell
now?
1000 value does that rebalance or
No,
reconstitute?
Russell 2000 reconstitution.
I don't know. I think they do it in the summer. Either way, just wild. So yeah, to like the value stocks and dividend stocks, I guess they're cousins, have been underperforming for a decade.
Yeah. Yeah.
It's been a long time.
Do you cover crypto at all? I know you have no choice.
A
You
little
have-
bit. I have to. It's been driving me nuts.
You're not into it at all. Like
I
it's not,
just, like,
it's not
I-
interesting to you.
It's interesting, but I find a lot of it offensive. To be honest, like
what aspect of me too? But maybe we don't agree on which aspect is.
I don't know.
most
Like
offensive.
I was like had this old man moment in our Slack channel. A colleague of mine was talking about that. There was this like, and I'm going to sound like a total grandpa. There was this like land sale
the
recently.
Bored Apes.
The Bored Apes,
Yeah.
metaverse, real estate.
Yeah.
And he was talking to me. He's like,
Yeah.
it's going to be a big deal. They're going to raise a lot of money. And I just kind
and
of
they will.
I think it was
They did.
upward of
They
$300
did.
million bucks. And I'm like, let me get this straight. This is imaginary land. That's what we're talking
What are
about.
these, the-
imaginary.
the deeds
Yeah,
to
yeah.
And,
imaginary land.
you know, 300 million.
It's
There's
a
like
great inflation hedge though, because you can't, even if you wanted to sell it at a loss, you can't like find the code to
there's
type
just
it
like
in and
there's
make
like
the sale.
people starving, you know, and these guys are spending $300 million on imaginary land. You know,
It's not imaginary. It's digital. All right, but let's talk about what's going on with Fidelity. So, Ali. So,
Did you know Michael was a big NBA Top Shots guy?
Yeah. Oh, we
you-
haven't talked
you
about that.
Son of a gun.
We haven't. Was that imaginary? Was that in your imagination, or did you really do that?
No, I did that for real. So we spoke last week about Fidelity opening their 401k lineup to Bitcoin.
Yeah.
Not yet. They're in the process of doing it. And Ali Kawar, who is the acting assistant secretary of the Employee Benefits Security Administration, said, quote, "We have grave concerns with what Fidelity has done." Does this seem a little bit overblown? We have grave concerns.
I don't know. I mean, if you're giving them a tax benefit, the government has a big role in this. You're giving these people a tax benefit.
Who? Oh, okay.
In 401ks,
Right.
right? Like that's created by the U.S. government in terms of the tax code.
But where are the grave concerns?
Oh, no. Here are the grave concerns.
It's down how much?
It's new and untested and it hasn't even existed. And most people don't even know what to do with stock and bond funds. This is like a level of complexity that you're adding to their list of choices. And the Labor Department's job is not to be the arbiter of what's a good or a bad investment. Their job is to protect ordinary, regular people from fucking up their retirement. So if you're putting an asset class in front of their face that's got a volatility level that's 4 or 5x the stock market, they should have grave concerns. It doesn't mean they're right, but why wouldn't they be concerned?
You know what
if I put lottery tickets on a 401k menu? Would that be okay?
You know what I have grave concerns with? S&P 500 index funds that charge 2% in 401k plans. I have grave concerns with
Okay,
that.
there are not that many of those. I know they exist.
There's a lot.
So hold on.
No. Hold on.
What are your grave concerns about this gentleman's grave concerns? I'm genuinely curious.
Grave concerns? It just seems ridiculous.
You don't like the choice of language.
Elizabeth Warren and Tina Smith sent a letter to Fidelity. Investing in cryptocurrencies is a risky and speculative gamble, and we are concerned that Fidelity would take these risks with millions of Americans' retirement savings. I don't understand
Do you
why.
know who pays for these people's retirements if they blow their 401k up? You do. I do. The taxpayer does. So do we want to have more people gambling or less?
Who said they're gambling inside of their 401k? You
Oh,
think,
no.
you think people are going to be trading Bitcoin inside of their 401k?
Well,
No.
What are they offering? Like a fund, like a Bitcoin fund or something?
I don't know. It's exposure
By
to
the way, I'm not
Bitcoin.
even against it.
Yeah.
I'm for the airing of concerns. I'm not even against it. I'm okay with it.
I am against the politicians deciding like what can and can't be inside of your retirement plan. Just generally speaking.
I don't know enough about like the actual like ERISA, the law that created these things to know whether, but it's some of it. These products were engineered by the U.S. government through the tax code.
ERISA and the Labor Department are extremely serious about this because they see themselves as being the guardians who are stepping in whereas this country used to be defined benefit.
Yeah.
So everyone that had a job at a big company, the big company was responsible for a pension for those. That's all over now. So all you have now that replace it as a 401k, which I think is great, but one of the drawbacks to this is you're putting very inexperienced, uneducated people in charge of a huge amount of money for them, and it's irreplaceable. You will never get back 20 years worth of earnings.
Yeah.
You think people will behave more irresponsibly with Bitcoin than they will?
No, you're missing my point. I don't. I think irresponsible people will be irresponsible. It almost doesn't
So what's
matter.
your point?
My point is this is an asset class that's so volatile and so prone to misinformation spreading on social media and so easily manipulated that it doesn't matter whether people are more or less responsible. It's more risk, period, no matter what they do. And it doesn't mean they shouldn't be able to do it, but it's definitely
worth thinking
sudden.
about. Yeah, it's worth thinking about.
Okay, so I agree that the 401k is a sacred investment vehicle, but you could roll your 401k into an IRA and blow yourself up to oblivion
Well,
with
100%.
with double levered negative
That is
exposure
true.
to,
Right,
to the
right.
price of oil.
Right.
But you can't have Bitcoin in your 401k. Give me a f***ing break.
We all agree that in the end it's the responsibility of the person.
I just don't like. What are they protecting people from? We have grave concerns.
We
We have grave concerns
All right,
with
so
what
why haven't-
Fidelity has done.
But
so
it's a
why
se-
have seatbelts? Just drive safely. Like at a certain point, we have to decide that it's cheaper to prevent people wiping themselves out than it is to
But
clean up
who
after.
says they're going to wipe themselves out
Some
if they put
com-
10% of their portfolio in Bitcoin?
but that's like maybe a wise thing to do. But it's like gambling, right? Legalized gambling. Like
Yeah,
there's
not everybody's gonna kill
There's some
themselves.
percentage of the population that is gonna have a problem, right? And it's like that's just human nature.
And what is the cost to
And
clean
so-
it up versus what is the cost
So
to
it's
prevent
like,
it?
yeah, it's worth it. I'm not saying I'm totally against having some exposure or the ability to trade it, but it seems worth thinking about. Like, what are we doing here?
How many people do we think will say, you know what? I'll have 5% of my portfolio in Bitcoin. What percent of 401k participants? I'm making this up, 15%?
I have zero idea.
We'll say,
zero idea.
We'll say
Here's what you're not thinking about.
What am I not thinking about?
You're not thinking about when Bitcoin goes to 100,000, which Michael Saylor assures me will happen. Do you really think that only 1% of people are putting 5% of their money into it?
Okay, fine. So
or do
that's
you
more.
think 10 million people are going to put half of their money into it?
They can't. It's capped.
That
It's capped.
day.
Fidelity caps it at 20%.
Okay, so then that's grave concern number one alleviated.
Right.
Okay. I mean, well,
Yeah.
that's why we have to have the conversation. It doesn't
Right,
mean
it's
don't
not-
do it.
yeah.
It means tell us.
It's more of the tonal. You don't like the tone.
Tell us
of
what you're
grave
doing
concern.
to make sure that people don't take a risk that's 5x the stock market,
that the
which is already very
taxpayers have
risky.
to come in and bail them out from.
I think it's reasonable.
I'm just sick of the. Sorry, I'm just sick of the.
Duncan, did you know he was like a libertarian deep down? I never thought of him.
I'm
that way.
not. I'm totally not.
I think we should add a "Don't Tread on Me" shirt to the
This
shop.
is turning into Joe Rogan for investing.
No, you know what? It's just. All right, I'm going to leave it there.
Keep your damn hands off his Bitcoin. By the way, the fact that Elizabeth Warren is at the forefront of this actually makes me feel like this is maybe, as much for
It's just political.
attention and
like,
political. Yeah,
come on.
I'm with you on that. I don't have a problem with what you're saying. I just feel like there's probably a middle ground. It's probably not.
The
yes
middle
or
ground
no
has been
Bitcoin.
addressed. It's capped.
It's capped 25%.
20.
Can you imagine how rich you would be if you had 25% in your Bitcoin of your portfolio in Bitcoin 5 years ago, your 401k, like relative to all other
I
participants?
just don't like this. No. We have to protect investors from this specific thing. Don't worry about all the other junk that have blown up billions of investor dollars, TVIX and all the rest of those. Like, don't worry about those. Those are fine because it's in your taxable account. But this piece right here is sacred.
I think the Bitcoin people have a problem in the way they're making political contributions. There's not enough going toward the Democrats yet.
You
they
think?
haven't cracked the code.
No, they're putting. I'm just writing. I've got something that I've been reporting this week on that. They're Sam Bankman-Fried.
You should break it right here.
He's sending a lot of money to Democrats. I mean, it's low.
Because he's smarter than most of them. He's one of the smartest
that's
guys I've ever seen.
Really?
Yeah, I think so.
That's what people say. I don't quite understand what he's doing. I mean, he's like.
I only podcast know him, but
Yeah.
I found myself nodding my head when he's talking, and I almost never do that with crypto people.
Yeah,
So,
yeah. I mean, he's spending a lot of money weirdly in safe Democratic district primaries. I don't know what he's got these
it's
groups.
not weird. It's optics. It's publicity, and he's zigging while everyone else can't wait to give money to libertarians in the crypto space.
Yeah.
So it's smart that he's going the other way.
I mean, I guess it reflects his politics, but it seems like
No, it doesn't. It reflects the wisdom that he has that you have to buy both sides of the aisle.
But his mom. I mean, his mom was a Democratic funder. It's like, man. I mean, maybe he doesn't have the same politics as his mom, but I assume.
I think somebody's got to buy Elizabeth Warren in this space and make her recognize the income inequality solution that is Ethereum.
Bitcoin
As
fixes
we
the
all-
income inequality. Haven't you heard?
God.
All right, last thing before we go to favorites. Elon was serious. He's got like financing plans being
guess
announced
so.
every hour of the day at this point.
What sort of spell has he cast on his fellow Valleyites?
Let me set this. Let me set this up.
No.
though.
No.
All right.
Ben,
go ahead.
no. Ben Horowitz tweeted this.
Okay.
While Twitter has a great promise as a public square, it suffers from so Andreessen Horowitz is investing. It suffers from a myriad of difficult issues ranging from bots to abuse to censorship. I think we all would agree with that. Being a public company solely relying on advertising business model exacerbates all of these. Agreed. Okay. Then he goes on to say, and I want to ask your guys' opinion on this. Elon is the one person we know, and perhaps the only person in the world who has the courage, brilliance, and skills to fix all of these and build the public square that we all hope for and deserve.
He alone
Just
can
say,
fix it.
really?
That's a true statement.
What do you mean?
You might not like what he does with it, but he is the only person with the courage. What are the other?
The
what are
only
other
person in the
superlatives?
world who has the
Brilliance.
courage, brilliance, and
No,
skills.
so all right, probably not skills. There are probably other people who have the skills to fix Twitter. The courage part is underrated.
Also, the money.
Well, that's a good point too. But Andreessen Horowitz has a lot of money too. You need courage because you're going to piss off everybody.
He definitely has
no
that in
matter
spades.
what you do. And I think not
He's
only is he
fearless.
not afraid.
Yes.
I think he revels.
Yeah, loves
in
it.
the uproar.
Yeah.
And
Yeah.
there are very few billionaires.
Yeah.
That want that kind of smoke.
Right.
Coming at them.
Right.
All right. Tesla's chief executive has received letters committing $7.14 billion from a group of 19 investors. The biggest contribution comes from Prince Al-Walid bin Talal. I knew they were going to get liberal. Who agreed to retain a stake in Twitter valued at $1.9 billion. Andreessen Horowitz. There's like 5 other people. Larry Ellison. Will you leave Twitter forever when this deal closes? and move to Canada?
I'm moving to MySpace.
Oh man, I'm much happier. The
You don't tweet.
not very much.
Me
I
either.
mean, I try to. It just drives me insane. Your life is better without it. But no, I won't leave it. I have to be. It's a part of my
You know
job.
why you
I
have to be
on it.
I didn't know where the hell you were all week. We were emailing you with no response. I sent Michael to your DMs today. I don't know. So
Sorry.
So I wouldn't say
Oh,
Twitter
man.
has no value. 'Cause
Yeah, no,
I didn't
no,
know
no.
where you were. All right.
Sorry, dude.
We found you, but we found you on Twitter, so that's good.
I was just gonna show up.
All right. So he was serious though.
Yeah, it's remarkable. He's a remarkable character.
Is this going to close at 54.20? This is going to happen?
I don't know what was it? It was trading at
49.
10. I don't know.
In a tape like this, that means the market really thinks it's going to happen.
Yeah, I guess you're right. Yeah, I mean, I
What
guess
if Tesla
so.
goes to $700?
But it's just the whole thing is so weird. It's like this is a public utility, therefore only the world's richest man can be in charge of
Yes.
it. Like it makes no sense. It's totally counterintuitive.
Why are reporters so obsessed with Twitter in general? Like a lot of your
We're
colleagues.
needy.
Like
We're very needy.
it's
people.
oxygen, right?
Yeah, I don't know. The Times just had the thing where they kind of warned everyone to stay off it a little bit.
Because it's nothing but trouble for.
Yeah, it's such a mess.
Although, what's her name at the Times? That's like a big.
Who?
She's great. She covers social media.
Oh, Taylor Lorenz. She left
Yeah,
the Times.
She left.
She left the Times.
I
Yeah,
do
yeah.
not.
No,
I'm
she's
so out of the
awesome.
loop.
Where'd
She's
she go?
amazing. I think she went to the Washington Post,
Okay.
but she's amazing. She's amazing.
Right. Okay. So, but I've always said like Twitter is the stock market for journalists because it's it's like what takes are hot.
Yeah.
What takes are cold. Who's clicking on what. That's important if you're covering anything really. You need to know what's being talked about.
Yeah.
How do you know what to cover?
Yeah. No, I mean, well, we did it before Twitter. There were newspaper stories written before Twitter. I don't know why. It's like we're sitting in our desk. You know what I mean? Like, probably shouldn't be as
But
much.
you
Like,
guys never you have. So you all have Chartbeat.
yeah.
We have Chartbeat.
Well, we don't have it, but I think people have it.
but
yeah.
reporters
Yeah.
have. Washington Post has it.
Yeah.
So they know whose articles are being read and where the traffic is coming from, and it's on a big screen.
That's like the front page.
That's the front page.
You know. Yeah.
So, but on Twitter, you know how everybody's stuff
What
is
did
doing.
journalists do before Twitter?
Talk to people.
Shoe
Went out
leather,
and walked.
shoe leather reporting.
Jimmy Breslin never went on Twitter. I don't.
Jimmy
think.
Breslin knocked on doors with a cigar hanging out of his
I
mouth.
took my kids on their first flight, and they were on the iPad literally for the entire time.
Mm.
What did we do on flights? I didn't go on many
Cried.
flights as a kid, but
Kicked the seat
what did
in
Kicked
front
the
of me.
seat, cried, ate. Still doing that. Still doing all three of those
You
things.
still cry?
I still cry sometimes, depending on how
I did?
delayed.
I did car trips like DC and Boston, and we just looked out the window and played Etch-a-Sketch.
We had a tape player. Like we didn't even have like a tape player in the car. We would bring like a cassette player.
and you like listen to books.
yeah, we'd listen to like
Audiobooks.
the Jungle Book
Jurassic
or like
Park.
Plug-in headphones?
Disney.
Plug in headphones.
No,
to
it was
tape
just
recorder?
like hitting the button and we'd all just
Oh,
like
no
listen.
way.
Yeah,
Like, what did you listen to?
yeah, like Disney stuff. You know, tapes. We would just,
Now these kids are watching they have every Disney movie
It's
ever
crazy.
made at their fingertips.
It's crazy.
And they're still not happy. All right, let's do favorites. I'm gonna go last this time. Michael's gonna go first.
Okay, so my wife gets up out of bed at 5:45
Okay.
every morning.
That's my favorite
to
thing,
go
too.
to school, and
She a teacher?
she's a guidance counselor.
Oh, cool.
And so I wake up when she gets out of bed, and I go on Twitter and scroll for 75 minutes.
He reads Axios.
And so
Sure.
recently I said, you know what? I got an hour. I got an hour in bed, and I'm gonna start watching TV.
I don't like where this is going, Duncan.
So
Put your hand on the edit button.
anyway. So this week I started watching Barry.
Oh
And
yeah.
I love it
Barry
because
Ritholtz.
it's 30-minute episodes, which is the best. I can watch anything for 30 minutes, and it happens to be
I
excellent.
never watched a single episode.
Excellent.
You'll
yeah.
love it.
Yeah, it's
Strong
good.
recommend.
Yeah,
He's
really
the,
good.
He's the director, writer, producer.
It's Bill Hader from Saturday Night Live.
So he's a hitman, and it's he wants to be an actor, like
Yeah.
a Shakespearean actor. And it's
is he
it's,
funny?
And the Fonz is in it.
it's
yeah,
dark.
Henry Winkler is
I love
as this
Henry
kind of like
Winkler.
washed up acting
It's
teacher.
dark and it's laugh out loud
so
funny.
Really?
It's laugh out loud funny.
Really good. Kind of
many-
like funny Russian mob characters are really good.
How many
Hank
seasons have there
Vachechnian.
been?
So the third season is on now, but it's 30-minute episodes. So in 8-episode series, it's a movie. It's 2.5 hours.
Huh.
It's very good.
It's good.
That is a good use of time. If you're up anyway, what are you? I
So
mean,
why am I scrolling Twitter? I'm just throwing a TV show.
you watch
it makes you miserable to
Bloomberg
scroll
at 6
Twitter,
in the
yeah.
morning, see how the Hang Seng did.
So I bang out 2 episodes a morning, and in a week I'll be caught up.
All right, Matt, what do you do when you're not writing about interest rates and the housing market? What are your favorites?
This is not the coolest app.
Go ahead. Disney cassettes. All in.
I'm a gardener, man.
Okay, go on.
I'm gardening.
So is Michael, and I'm trying to be.
Really?
I don't know what I'm doing. Michael
Yeah,
does a
dude.
little
No,
bit.
you don't know when you first start. But yeah, no, man, I got peonies are coming up, dude. I've got
Peonies.
Yeah.
Flowers?
Yep, flowers mostly.
Okay.
Daffodils like crazy big.
Oh, I'm a
time.
farmer. I do vegetables.
Oh, really?
You're
Cool.
You're a florist, bro.
Yeah,
Keep it real.
I'm doing some corn. I'm doing a three
corn.
Three
'Cause you have
sisters.
land.
A little bit.
Yeah.
In Westchester.
Three
Yeah, it's
Sisters
different.
garden?
It's different than Long Island.
Yeah.
You know, it's like corn, beans, and squash. The stuff you had to learn about in school. I'm doing one of those gardens with my daughter.
How's it going?
It's in my garage at the moment. Like
Yeah,
their
it's
seedlings are growing. I haven't gotten it
warm
out
enough yet.
Yeah.
Okay. And what are you doing
So
this
you
year?
garden.
Yeah,
Like,
man.
Yeah, huh.
Yeah, that's good for your.
We have Tony Isola's a huge gardener. He loves it.
Oh, really?
Yeah, it's good for the soul.
It's so good for you.
I do cucumbers, peppers.
Oh, nice.
Lettuce, tomatoes.
Raised
obviously,
beds or-
basil,
Lettuce? What kind of lettuce?
arugula. Who's laughing?
Wait, why is that funny?
You're just talking about what kinds of lettuce.
I do arugula.
Well, no,
Oh, yeah.
because I
I'll
don't
do- I'll
picture
do-
That's fast. That's
I
a
don't
fast
picture
crop.
somebody growing their own lettuce.
I'll do a spring mix. No, arugula is great.
Wait,
Yeah, man,
spring mix,
delicious.
does it grow in the bag?
Pretty much.
The bags grow on trees. You pluck them.
All right, I don't know what I'm doing gardening at all.
Well, what are you
but
trying to do, man?
I'm doing 2 types of tomatoes and basil.
Basil.
Oh,
what
nice.
type of tomatoes do you
Can't
do?
f up basil.
Beefsteak?
No,
Cherry? Grape?
No, Roma in 2 pots. They're like the plum.
Yeah, it's like the oval. Oh, that's like an egg.
Yeah.
And cherry tomatoes in 2 other pots, and then basil surrounding them.
That's
Do you have
awesome.
to do you have to hide it
Great.
behind the shed? Does Sherry know?
No, it's hidden.
Do you guys
My
have
wife.
deer on Long Island? I forget. Or were they all?
No, my wife thinks I'm going to bring ticks into the backyard if I grow stuff or slugs or whatever.
I don't know.
So I'm growing.
He hides
this,
it behind the shed.
I swear, I'm growing this behind the shed. It's got ample sunlight, but I'm growing it behind the shed. She knows it's there, but like she doesn't want to see it because she thinks I'm attracting animals and bugs.
There's
to
no
the
deer.
backyard.
There's no deer.
There's no deer in Long
no
Island.
deer.
The deer will eat
No,
all my
there's deer
stuff.
in Fire Island.
Yeah.
If you want to
really?
see deer, they
Yeah.
eat out of the garbage there. It's
Sounds
it's
lovely.
quite picaresque. All right, my favorites: Ozark season 4, last season, one of the best finales to any show I've ever watched.
Unbelievable.
I
You
liked
finished it?
Ozark.
You love it?
I'm so sad.
So great.
Can I tell you something?
I was really sad too.
Because I thought there were 8 episodes, so I had no
7.
closure. I didn't know. I didn't say goodbye.
You couldn't tell the last one was the last one
I thought there was 8.
because it doesn't
So
make
it
sense.
didn't occur to me
Yeah.
until I hit next. I was like, wait. I go. No.
What did they do?
That's a
6?
really
They did
weird
6 and
feeling.
then
I've had
7?
that thing too.
It was messed up. It messed with me.
Yeah.
But anyway, they nailed it.
They did. They was so satisfying.
Yeah.
They did it. They did it almost as though Jason Bateman said, "Guys, I want to be able to walk on the street after this. Like
What do
I
you
don't
mean
want
by
to
that?
like I don't want to be one of these people that takes someone on a 4-season ride."
Oh.
And has them fall in love with these stories and the characters, and then piss everybody off at the end to be artistic.
It was one of-
let's wrap everybody's
I don't know if
story.
this is recency. It's I think it's in my top 10. I love that show.
So good.
It's really good, but I couldn't watch it after a while. Just the violence was getting to me. I just like.
Oh, but that's why I watched.
I wanted more
'Cause
violence.
you're a
It wasn't
psychopath.
dark enough.
John Ozark.
Love it.
Love it.
Did you finish?
Halfway through.
Okay.
Okay.
Yeah, of course.
You
Yeah,
gotta
we
be an
binge watched
Ozark
it in
guy.
the first like 24 hours. Yeah.
You didn't even let a day go by. You
No,
had
no,
to.
it was very.
I was
good.
done by Saturday.
The violence was a lot. I looked away at some scenes. You know.
Yeah,
but
yeah.
It
It's
was,
just kind of like sometimes I just don't want to see people's heads getting
This
blown
season
off.
was not about Marty Bird. Ruth and Wendy just have taken over the show,
yeah.
right? Like
Ruth
they
is-
are
Ruth
the
is
2 main
incredible.
characters of the
She's
show.
incredible.
It's not
Ruth
even
is kind of
close.
like the kind of
The
You could say redneck.
Yeah.
It's okay. Only
Yeah.
New Yorkers listen to this.
yeah yeah. No, she's amazing. That actress is incredible.
She's incredible when you consider she was just playing the German heiress on HBO 2 months ago.
Oh yeah.
Anna Delvey or whatever.
Oh yeah.
She's like completely transforms into these
She's a
characters.
star.
Isn't it weird they dropped that literally in the middle, in between the two
Yes.
season or the two like halves of Ozark? I
Yeah,
thought that
she's
was weird.
incredible.
Actually, TV's back. Like I feel like TV's on fire.
Wait,
now.
I got a show for you guys.
What do you got? So this is what we're doing.
Slow horses.
Oh,
I haven't started
I've
it
heard
yet,
about
but
that.
I've heard good things.
Multiple people. We got a thumbs up from John.
Yeah,
John's
yeah.
into it.
What's the
so-
premise?
Well, so it's my favorite. I was a fan of this guy's spy novels. His name is Mick Herron. The premise is, you know, like how in New York City teachers, like if they're really bad, they can't fire them. You put them in a rubber
Tenure.
room.
Yeah.
Oh.
Yeah.
So it's like that, but there's for bureaucratic reasons. There's this thing in the British intelligence services where you have these up spies. They send them to this one place where it's like busy work, and they hope that they quit.
Okay.
after a while. But, they get roped in this like gang of screw up spies.
And they don't quit.
Yeah, they don't quit.
Okay, I love it.
Apple?
Awesome. Apple TV.
Look at Apple.
The books are hilarious, laugh out loud funny, and they preserved a lot of the great dialogue. Gary Oldham is like the guy who runs the team.
Oh, he's the best.
He's like a washed up.
One of the greatest actors.
Yeah, just amazing. It's really
Yeah.
good. It's really
Okay.
good. The books are great too. Mick Herron is the name of the writer.
All right, I got to check that out. I have
can't
that on my
believe
list.
So the Northman, what you saw, you went to the movie theater to see this?
I did.
By yourself?
Yeah.
Why?
I did. I was
Why
gonna,
didn't you text me?
I was going with somebody who canceled, and I just said I'm just gonna go.
I would have come.
You would have come. I should have called. I should have thought
Although
of
I
you.
do hate Robert Eggers. No
You would have
offense.
hated this movie.
Oh, I knew it. I knew it.
You would have hated it.
I know it.
This was the most violent thing.
I heard there's a lot of head chopping.
Honestly, it goes so far beyond that. There's a main character who has no nose. His nose has been removed, so it's just holes
What was his
in
name?
the front of his face.
Because it was a film, right? It was a film. Just slow.
It was
boring.
All right, how do I describe this? Do you remember True Blood? Remember True
Of
Blood
course.
on HBO?
Yeah, Eric Northman.
So, right.
Yeah.
So it's him.
Yeah.
I guess he's 10 years older now. Great actor of Scandinavian descent. He's the main guy.
Right.
And he's a berserker, which are the scariest types of
Yeah,
Vikings.
they're like the shock troops.
They're hypnotized using a mixture of drugs and whatever into thinking that they're part bear, part wolf.
Yeah.
And by the way, the historical detail that this director was going for is the reason I went to see it. Like, this is not Lord of the Rings.
Yeah, this guy's obsessed.
This guy's obsessed with nailing the true details of how these people lived.
Yeah.
And a lot of their lives were based on like mysticism and magic.
That's
and
cool.
so these people would be hypnotized and they could like kill 1,000 people each because they were just so completely lost in shedding blood.
So why would I hate it? Because I love violence.
Okay.
It was boring, right? It was filmy.
No, it was very artistic.
Yeah. Okay, same thing.
So there would be like whole scenes where it was like, wait, that was fantasy. That didn't really happen. And I guess I could picture you being like, wait, what is this bullshit?
Did you watch The Lighthouse?
I saw that one.
it's the same
Third
director.
one.
Oh, it is the same director.
Oh, so if you hated that,
That's
you'll really hate this.
I know people filmmakers love that movie. To me, that's the worst movie I've ever seen.
So this is that, but with
Willem
people
Dafoe.
having like their
Weird.
eyeballs
Yeah.
ripped out and eaten in front of them. Like this is honestly, I've never seen anything more.
I'm
violent in my life.
gonna watch it. I'm gonna hate watch it.
Now, if you are gonna watch it, go watch it in the theater because the cinematography of Iceland is f***ing ridiculous.
But is it 2.5 hours?
No, it's 2 hours.
Okay, all right. I'll hate watch it. I'm gonna hate watch it at home. On the couch.
Hate watch it if you must, but I appreciate
That
it.
guy's.
I don't think. By the way, this is a movie that you never want to watch twice.
He's not quite as bad as Paul Thomas Anderson, but he's close.
God. And with that, all right. Listen, did you have fun today?
Yeah, it was awesome, man.
Okay.
Have me back. It's fun.
100% we're gonna have you back.
Yeah.
So you have to keep writing though. Listen,
Uh,
I read every one of your things. Here's
Thank
what
you.
I do.
Thank you for reading.
Kate Marino, I guess, curates the newsletter.
Yeah, she's the editor. She.
Okay.
Yeah.
And so
Emily Peck too is my.
Wait, I
Emily
don't
Peck.
subscribe. I'm embarrassed to admit. How do I do that, Matt?
Just
Where do we go?
subscribe Axios Markets. in
Axios
Google.
Markets.
Yeah.
All right. I'm in.
you do a great job with it, and I read it. I get it every morning, and you usually have an article in there.
Yeah.
Right. And I feel like it's a great use of time because it's a short amount of time. Smart brevity on the markets.
Awesome.
So, hey, you do a great job with it.
Thanks
Thank
very
you for
much.
coming.
Thanks for having me.
All right, Matthew
Matt.
Phillips. And how do we follow you? You hate Twitter, but you're there.
Yeah, at Matthew Phillips, two
At-
L's.
At Matthew Phillips with 2 L's, ladies and gentlemen.